So in this video, we're going to talk about Rivian. They were down roughly a percentage today, not much, but the reason why they were down because they stated a while back that they could have a gross profit for the fourth quarter. Their earnings is coming up on February 18th. However, cost-cutting measures was going to be a big contributor to them achieving a gross profit for the quarter. However, with all the tariff news coming out, that could put a wrinkle into things as it would increase their parts because Rivian, although is an American company, they are a global company when it comes to their supply chain. So this is the 1 hour chart, and as you can see, price did dip on the news, but it did find buyers at about $12. Why? Can't make this stuff up, because if you look on the daily chart, you have a daily buy level at $12, and that was based on this rally basing candle and then the rally out. Most recent leg higher stems from this weekly buy level at about $10.25, and so potentially now you are getting the impulse move, the pullback before the next impulse move higher. However, that remains to be seen. Again, tariffs is going to, I think, either make or break Rivian this year. Let's get into the news and then we'll get back into the charts. So the EV sector is in a state of flux. Some manufacturers are pulling back as demand growth hasn't met or exceeded early expectations. That's crucial for startups like Rivian, as it needs volume to see sales turn into profits. Now, in the third quarter earnings report, Rivian's management held to the prediction that it would achieve a positive gross profit in the fourth quarter thanks to ongoing cost reduction progress. Now investors are concerned that tariffs could impede progress. While Rivian's only production plant is in Illinois, the automotive supply chain is global. That means costs could start to increase with imported parts impacted by tariffs. Even with its cost-cutting campaign, Rivian said it only expected a modest positive gross profit in the fourth quarter. Investors will hear a lot more when the company reports in February, but the investing case for Rivian just got a bit more murky, and the 7% drop the stock has experienced since the start of the year might not represent a bottom if costs begin to increase for Rivian. Yes, so beginning of the year, price is down. However, price action says it is time to buy. Again, price is at that daily buy level at $12. Let's scroll down to the 4 hour chart just to see what things look like. All right, so you do have some basing. You do have the breakout to the downside. Again, right into buyers. And if you go to the 15-minute chart, here's what it looks like. 9:30 open, drops, finds buyers, and steadily increases throughout the day. So if you are a swing trader, the charts are suggesting one can go long now. However, have a stop and give yourself some room. Not a bad place to put a stop at this $11 level. Thanks for watching. Subscribe, please. Like the video.